paid by the owner, paid by the owner, paid by the owner, paid by the owner. Paityama? No, I am not mad. Pre-construction period interest, post-construction period interest, 2 lakh, 30,000. This is 2 lakh for pre-year, 2 lakh for post-year, 30,000 for pre-year, 30,000 for post-year, SOP, LOP, oh God. Always. Oh. In the new tax regime, it is zero. This is your Sukumar Reddy B. Namaskaram, and I am here with a new video and Kuti as well as a very interesting topic. It is nothing else than interest on borrowed capital. Where did you see this? Where did you see this? You would have seen this under section 24B, which is the second deduction in the pro forma of house property. Now let us not even wait for 1 minute. Let us rush into the video. Come. Income from house property. How will you present the pro forma? You will start with GAV. GAV abdina village la. Gross annual value. From that you can minus municipal taxes paid by the owner, paid by the owner, paid by the owner, paid by the owner, paid by the owner. Paityama? No, I am not mad guy. I am intending to say something here. Paid by the owner abdina, the payment should be done. Also the payment should be done by the owner. Only if these two things are satisfied, you can minus that. Once you minus this, you will be left over with now net annual value. From the two beautiful deductions will be given. Section 24A deduction, section 24B deduction. 24A na flat 30% deduction you can take on the now. Whatever is now, on this you can multiply 30%. Whatever comes as answer, you can minus this here. Section 24B deduction is interest on borrowed capital. Avula period terms it is very difficult, sir. Interest on loan taken for purchase or construction or repairs or reconstruction of house property. That interest you can minus here. Today our video is all about section 24B. If you minus these two deductions, you will be left over with income from house property. But stop. Why did you choose this topic, sir? What made you choose this topic? Pre-construction period interest, post-construction period interest, 2 lakh. 30,000. This 2 lakh for pre-year, 2 lakh for post-year, 30,000 for pre-year, 30,000 for post-year, SOP, LOP. Oh God. I want to give up this. I don't want house property chapter. Tadai. Sukumar is present in front of you. Why fear, yeah? When I am here. Got it? Let us rush into the topic. Henceforth, you will never face any difficulty in this interest concept. I am going to make your life very easy, but I want one thing from you. I want a dedication to the core. Until I finish this video, please concentrate and listen. Section 24B. I wanted to tell you some important points about this. We have seen that municipal taxes is paid by the owner, right? Adhe mari, interest need not be paid. It is allowed on accrual basis. Whatever accrues in a particular previous year, that accrued amount fully you can minus under section 24B based on the below conditions. Got it? Okay, which means we can tell like this, right? Always deductible on accrual basis. In the exam, the examiner will tempt, come, do the mistake. What kind of mistake they will ask you to do? They will tell interest of 1 crore rupees. Nothing is paid till date. What will you think? Oh, nothing is paid till date. We should not take. You will think, right? Nah. It is wrong thinking. Because interest is allowed on an accrual basis. Got it? And the 1 crore, check the limits available for it and then put it in 24B. Simple. So always it is allowed on accrual basis. And one more thing. Sir, I have already had a loan for purchase of house property, but I found something beneficial in a new loan. Now I am taking a new loan to close this old loan. This old loan has gone. I closed it. Now I am left over with this new loan, right? On this I will pay interest. Is this interest covered under section 24B, sir? Answer is yes or answer is no. What did you feel? And the correct answer is, answer is yes. you can take it as a deduction happily, because it is indirectly related for that purchase of house property, right? Therefore you can take this deduction. Come back to the core important point of this topic. How much interest I can put it in 24B, sir? We will calculate in two steps. Step number 1, it is you have to take 1/5 of pre-construction interest plus 100% of post construction interest. This two, when you add, this is the answer of the first step 1. This is the answer. What is pre-construction, what is post-construction? Again the same trauma is going to get started. Don't feel trauma, I am there. Listen, pre-construction abdina, pre-construction period in layman's perspective another. If you are finishing a construction of a house property construction finished abdina, whatever is preceding to this, it will be called as pre-construction. Whatever succeeding to this is called as post-construction for a layman. But for us, for a lawman, it is not the case. Pre-construction period interest, what income tax says is, it will start from the loan taken date and it will always end on 31st March preceding the previous year of completion of purchase or construction. Apana neenga one previous year you will finish purchase or construction, right? Say for example you have finished your construction on 10th August 2024, whatever 31st March that comes before this, apana 31st March 24 will come before this date, right? Your pre-construction period interest will always end on this date. A kind of rounding off mechanism. 31st March they are rounding off. Now you tell me the correct answer if you have understood this. Loan taken date is 1/6/2020 and construction completion date is 1st February 2025. Apana, what will be the pre-construction period? Pre-construction period will always start from the loan taken date and it will always end on the 31st March, which comes before to the completion date. Apana, idukku munadi vara whatever 31st March that comes before this is what? It is 31st March 2024 comes before this, right? Therefore this is called pre-construction. Post-construction is very simple. The next day immediately after pre-construction is called as post-construction. Now let us read the theory. Come here. Pre-construction period interest is equal to interest that is starting from the previous year in which you have taken the loan till the 31st March, always a kind of rounding of 31st March preceding the previous year of purchase or construction completion. Whenever you finish construction completion, whenever you finish purchase completion, take that previous year and the previous year whatever 31st March comes before it, that will be the end date of pre-construction. Got it? I hope it is very simple. We'll do numbers and we will see. You'll get more happiness. Now, how many years will you take this 1/5 of pre-construction, sir? Abdina, you can take only for 5 years this interest. Why, sir? Because whatever you have paid during pre-construction in that respective years, no interest will be allowed as deduction. All the pre-construction period you will accrue or pay, right? Keep it in a treasure box with you aside. Once the post construction period starts, abdina, the previous year in which your completion finishes, starting from this year, whatever you have accrued your pre-construction period expenses interest, that you can start allocating equally over 5 years starting from the post period. Apana post period you will get 2 interest, right? Pre-construction period interest 1/5 plus whatever you pay during the post, that will be allowed 100%. I am repeating for the second time, please listen. Whatever you pay during the post construction period, whatever interest is accrued or paid, nothing will be allowed in that respective years. What should you do? Don't sit and cry. Whatever you pay during the pre-construction period interest, keep it with you, write it and store it with you safely. Accumulate all the years of pre-construction and keep it with you safely. That accumulated amount will be given 1/5 for 5 equal years starting from the post period. For 5 years they will allocate. Also post period, now you will also have interest for post period, right? Apana 1/5 of pre-construction plus 100% of post construction is called our step 1 interest answer. So this deduction is for 5 years starting from the previous year of completion of purchase or construction of house property. I just now said you logic why they are starting it. I mean why they are taking 5 years. Correct? It is given by income tax. But I have said you all the things that you have paid in the pre-construction period interest should be stored with you. The total amount will be taken over 5 equal years. Abdina 1/5 solalamna for each year. So 1/5 of pre-construction period interest will be given for 5 equal years starting from post-construction period. Post-construction na the previous year in which completion is finished. You can simply tell post-construction period interest. Along with this, you will get 100% of post-construction period interest. 1 plus 2, you will get total interest. Half of the burden is gone if you understand this. Now you are left over with some number, right? Now check which house property you are having. You are having a self-occupied property, you are having a let-out property. If you are having a let-out property, no old regime, no new regime, always it is unlimited. There is no limit itself. Whatever interest is coming here, that will straight away go for 24B deduction fully if the house property is LOP, let out property. However, whatever amount is here, if it is because of an SOP, if it is for SOP, then always in the new tax regime, it is 0. It is 0. Whatever interest comes here, that will automatically become 0 under section 24B if you are choosing new tax regime. However, if you are choosing old tax regime, this interest is not fully allowed like LOP. It will have some restrictions. Either you can take 2 lakhs or you can take 30,000. You can take 2 lakhs under section 24B if you are choosing old tax regime if you satisfy 3 conditions. What are those 3 conditions? The loan which you have taken should be on or after 1/4/1999. Plus is very important, cumulative conditions. And the second condition is loan should be only for purchase or construction of house property. Only purchase or construction. Apana, if you take for repairs, that is not covered here. Got it? And the third condition is purchase or construction of house property shall be completed within 5 years from the not loan taken date, from the end of the previous year in which the loan is taken. If these 3 conditions are cumulatively getting satisfied, you can enjoy maximum 2 lakh rupees per annum. Apana, if you are having 2 SOPs, one SOP to 2 lakhs, another SOP to 2 lakhs, still it will get restricted to 2 lakhs because they are using the word per annum, not per house property. Got it or not? Come for next case. Sir, what if these 3 conditions, edavadhu oru condition dukki, edavadhu oru condition fail, or all the conditions fail? Correct? Or if it is for something else, for example, if the loan is for repairs or if the loan is for some other reconstruction purpose, in all the other cases, the limit is maximum 30,000 rupees per annum. Sir, what if I have a house property which is satisfying 3 conditions plus SOP? Also, I have second house property which fails these 3 conditions. Apana, that house property which satisfies the 3 condition, you will enjoy 2 lakhs in this case, right? And second house property will enjoy 30,000 maximum limit, right? Upper 2 lakhs, I will write it here, see, upper 2 lakhs plus 30,000, your LKG failed. It is still 2 lakhs only maximum. Ennadu sir, what did you say? Array, you are having 2 house properties which are SOPs. One, you have taken loan and three conditions got satisfied. One, you have taken loan and three conditions did not get satisfied. For this you can enjoy maximum 2 lakh rupees per annum, right? And for this you can enjoy maximum 30,000, right? 2 lakhs plus 30,000, 2 lakhs plus 30,000. Your LKG failed. 2 lakhs plus 30,000 is not 2 lakh 30,000. It is just 2 lakhs in income tax language. What is the artha, sir? Whatever you are taking deductions under this category, the maximum ceiling limit will be restricted again to 2 lakhs only. Got it? Super. Now let us end this video by consolidating one more time. Part A, how much interest you should put in 24B, sir? Part A, you should take 1/5 of pre-construction period plus 100% of post-construction. You will be left over with some interest, right? That interest you should check. This interest is pertaining to SOP or LOP. If it is pertaining to SOP, always in new tax regime it is 0. And however, under old tax regime, if they are satisfying that three conditions, then you can take maximum of 2 lakh rupees. However, if they are not satisfying that three conditions or any other reasons, it is just 30,000 rupees maximum per annum. However, if this step 1 interest is not because of SOP, it is because of LOP. No conditions, nothing jolly-o, jumkana. It is fully available as deduction. Got it or not? Now let us do some examples. Come back here. Sir, loan is taken on 1/10/2013, whereas construction is completed on 1/8/2025. What is pre-construction and what is post-construction, sir? As I said you, pre-construction will start from the loan taken date and it will always end on the 31st March, which is preceding the completion date. Completion is preceding in the previous year 24-25. Whatever 31st March comes before this will be the end date of pre-construction, right? So pre-construction will be starting from the loan taken date. It will end on the 31st March, which comes before this date, that is 31st March 2025. What is post, sir? Whatever comes after this, that is 1/4/2025 comes after this, right? From that period, whatever you pay interest, that will be called as post. In that particular respective years, you can take 100% of post. Come for example number 2B. Loan is taken on 1/10/2014, whereas construction is completed on 1/2/2025. Always pre-construction period will start on 1/10/2014 loan taken date and it will end on the 31st March preceding the year of completion of construction. Whatever 31st March comes before this is 31st March 2024. Therefore, your pre-construction period will start on 1/10/2014 and it will always end on 31st March 2024. Post is very simple. Whatever precedes this date, post will start from 1/4/2024. It will end on loan closing date. Whatever you pay in post, 100% is allowed in that respective years. Now, one beautiful question. What is the maximum time limit to finish the construction of a house property to avail deduction of 2 lakh rupees under section 24B if loan is taken on 1/8/2019? Nothing rapatus. 1/8/2019 they have taken loan. Now they are asking to take 2 lakh rupees deduction under section 24B, within which time limit I should finish my construction. We know that is 5 years, right? 5 years from the end of the year in which loan is taken. That is one condition. And loan should be for purchase or construction. It is already getting satisfied. And what is one more condition? The loan should be on or after 1/4/1999. So they have taken on 1/8/2019. Super. All the three conditions will get satisfied provided the completion should be finished within 5 years. Now they are asking what is that 5 years deadline. So you should take from when 5 years? From the end of the year in which loan is taken. The end will come on 31st March 2020 will be the end year for this previous year, right? From this you should add 5 years, which means it will come for 31st March 2025. So if you finish your completion of construction before 31st March 2025, then it is set to satisfy that 5 years condition. Super, got it. Last question of this video. It is very easy and important thing. Loan is taken for construction of house property super on 1/10/2022 for 10 lakh rupees they have taken the loan, and interest due is as below. 110 loan taken date in the 31st March 2023 వరకు 1,50,000 is the interest amount fully paid. From 1/4/2023 to 31st March 2024 fully paid 2,10,000, and 1/4/2024 to 31st March 2025 2 lakhs. Achachoo, nothing is paid. Don't feel sad. Interest is allowed on accrual basis. This also you can take for calculation purpose irrespective of this payment. Remember? Okay, come here, we'll do the answer. What they are asking, sir, abdina, construction of the house property is finished on 1/5/2024 and calculate the deduction available under section 24B in all these cases. SOP old regime, SOP new regime, LOP old regime, LOP new regime. Close your eyes. Always in LOP, answer will be the entire interest, that is 1/5 of pre plus 100% of post. The entire interest will be allowed as deduction in LOP. Unlimited, no limit itself, correct or wrong, how much ever the interest gets accrued, that much it will be allowed as deduction. Upon how much is the interest, we will first find it out. Step 1 we should do, right? 1/5 of pre plus 100% of post. What is the pre-construction here, Rapatus? Pre-construction starts from the loan taken date, which means the loan is taken on 1/10/2022 and it will always end on 31st March preceding the completion. What comes before this? 31st March 2024. Upon 2022 to 2024, everything will be called as pre, which means 31st March 2024 till here 1,50,000 plus 2,20,000 both will be called as pre, and whatever succeeds this alone will be called as post. Now what is the quantum of interest? That is 1/5 of 1,50,000 plus 2,10,000. 1,50,000 plus 2,10,000 la 1/5 will be 72,000 plus post construction period interest, that is 2 lakhs. It is available entirely. Therefore your first step answer is 2,72,000. If the house property is LOP, irrespective of the regimes, మొత్తం 2,72,000 will be allowed as deduction. However, if this 2,72,000, if the house property is SOP under new regime, answer is dead easy, it is 0. However, under old regime, you should check whether the 3 conditions are getting satisfied or not. What are those 3 conditions? Loan should be taken on or after 1/4/1999. Yes, loan is taken after 1999. The second condition, the construction or purchase should be finished within 5 years from the end of the loan taken date, right? Apana inganendu 5 years from the end of this year is loan is taken in 1/10/2022. Apana that year will end on 31st March 2023, right? From here you will have 5 years time limit, correct or wrong? Which means you should finish before 31st March 2028. And when did they finish? They finished in 24 itself. Upon a 5 years condition also got satisfied. And third condition is the loan is purely for purchase or construction. Yes, it is for construction purpose. Jolio, Jumkana, 3 conditions got satisfied. Upon a maximum limit is 2 lakh rupees, correct, right? Your interest here is 2,72,000. Upon a 2,72,000 or maximum of 2 lakhs, whichever is lower. Answer will be what? 2 lakh rupees. You can take deduction under old regime for SOP. In the new regime, it is 0. However, for example, if the question is asking loan is not for construction, loan is for repairs, apana what would be the answer? It will be 2,72,000 or 30,000, whichever is lower. 30,000 would have been the answer. Got it or not? This is all is about our today's video. I hope you have enjoyed this session. Please comment below what is the topic that you are waiting for, or what is the topic that you wanted to hear from my side, please comment below, and I will come with another new video, another interesting video at earliest possible. We will end as usual our video by telling a slogan called DT is beauty. Bye bye. Please don't forget to subscribe the channel and share it to your friends so that others also will get benefited by this video. And one last time, bye bye for today. I will come with another video.